This conference will now be recorded.
Hey, what's going on, Flex fam? Happy Wednesday evening. Dang, I can't believe it's already Wednesday. Been a slower couple days for me ever since last, um, what would it have been? I guess what was that? Last Wednesday. Last Wednesday when we kind of washed out on crypto, marked that temporary bottom, and then we had that bounce. Um, I was I was decently heavy in some positions, and I had a really good day, my best day that I've had in months. And for me to be as patient as I have been, and then to have that trade opportunity present itself, and for me to execute the way that I did was kind of a good enough situation for me where I was like, okay, hell yeah, nailed that trade, had the thesis right, nailed the trade. What more could I do now? I had great exits too. Um, so I've kind of taken a little step back the last couple days. So I haven't been trading as much. Um, and that just kind of goes into play talking about like psychology, right? I was as patient as I had been, waited for that opportunity, that A+ setup came. I hit it. Like I say, you wait for the home run pitch, right? I waited patiently for that home run lob, hit it, and now I'm back in the same boat that I was in all of March, all of April, and the vast majority of the month of May, right? I'm back to just being totally patient. With that all being said, there are some setups that are starting to construct themselves in a manner that is worth having skin in the game, definitely worth paying attention to, but for me anyways, worth having skin in the game. And I'm going to break down a couple of those charts. And I'm gonna talk AMC and GameStop because I know they've had some big moves over the last couple days. So I'll break those down a little bit. I'll briefly touch on Bitcoin, and then I want to go through a couple different scans, just kind of blow through some scans, show you guys quick, what my thought process is and some of the stuff I'm thinking. But yeah, let's hop right into it. Let's waste no time. First and foremost, let's talk Bitcoin. So ever since last Wednesday, when we got down to that $30,000 level, and if you recall the video that I made from late Tuesday night last week, I guess you could even say early Wednesday morning, I think we were still up in that like $39,000 range, somewhere in that range. Actually, might have been up in like the 42, 41,000. Anyways, I've been talking about it for weeks, so it shouldn't have been a surprise. It certainly wasn't for me. But since then, we had a nice bounce, which was the trade I was looking for, obviously, that 15, 20% bounce. I think we ended up bouncing in the range of 30, 35%, 40% from lows. So obviously, you're never going to buy the exact bottom and sell the exact top of the bounce, but to get the meat of the move felt good. For me, I actually ended up making the majority of my money last week on Litecoin. I had as low as like 160, 155, I think was my lowest bid on this washout. So I probably ended up having around 170 average, and then I bounced that to about 205. So I want to say I got a solid 20, 25% trade in there. And again, I was hitting that for a little more size than I normally do, just because it was such a rare opportunity, something like the A+ type of opportunity that I wait so patiently for. And then again, later in the week, we had another washout. Again, same with Bitcoin, same with Ethereum, everything really, the entire crypto space, a second washout and a second bounce. And now it's kind of having, that narrowing range, right? We're contracting in again. So really, I'm in the boat where I think anything up toward 42, 43,000 on Bitcoin is going to be met with a lot of supply. I think it's super, I still think it's super top heavy. I think there's going to be a lot more supply than there's going to be demand. When these get pops, I think it's going to be sold off into. And that's really my thesis for probably the next 3 to 6 months, to be perfectly honest. I don't see how short-term supply is met with an increased amount of demand. I think that this kind of just chops sideways, but ultimately lower over the next several months. And I think there's obviously still a chance at some point that we get another good wash trade down toward low 20,000s, maybe even something up like upper teens, 18, 19,000. I think that's certainly possible. But again, we're talking down the line. This isn't going to happen tomorrow. But I think the full extent of the bull market is ready for a correctional phase. There is a lot of something that I look for is momentum in the major moving averages. And to me, this 50-day moving average is gaining a lot of momentum to the downside. And, it doesn't necessarily mean anything, but the more the price trades below, not only is it below the 50-day, but it's below the 200-day. The more it trades below that, the more it's going to gain momentum down sloping. And again, it's a lagging indicator. It's a moving average. It's a simple moving average. It's not really showing you too much, but historically speaking, when we start getting that top heavy downturning 50-day, and then we cross the 200-day crosses over, of course, that's the bearish cross. That's when you want to start packing your bags, hitting the road, and taking some time away from a certain space. So, and in fact, so that's how we look, of course, right now. We could go back to the 2017, 2018 top, and you see a similar situation with the 50-day. Once it gains the momentum, it's really tough to catch it back up, especially once we start trading below the 200-day moving average. There's a lot to talk. There's a lot to break down into this thesis, but generally speaking, I think Bitcoin is way overdue for that correctional phase. And long story short, I think the next several months is sideways but lower, kind of that general look that you see here. And ultimately, I think we end up testing toward 20,000, perhaps below 20,000. So no rush. There's no trade thesis right now. It's really just being patient again. It's being patient, and it might be a month, it might be 2 months, it might be 3 months. But the next major trade I'm looking for is going to be something very similar to what we had the other day, which was that big washout. That type of washout where you drop 20, 30% in a matter of an hour or 2 hours, right? And I don't think that's going to happen necessarily anytime soon. So for the time being, just patience. Let this thing construct itself or deconstruct itself, whatever it's going to do. SNDL, I put out a tweet earlier on this guy. Tilray, similar situation, but just from a risk to reward perspective, these are really getting interesting again. And if you follow this general trend line dating back to March, you can see we're perking over that. Of course, you could also try to draw a lower trend line in there too. But I didn't even realize this, but We've got an anomalous volume bar today too, the highest volume that we've had in months. So that's another good indication that a possible bottom is in. Big levels here, we're looking at $1, and then the next big level is right up there around $1.20. So those are your big levels to watch. Again, this isn't the type of trade where I'm like, okay, you know, this is going to go back up to $2 or $4 anytime soon. No, that's not what I'm saying. But there is a chance that if this does confirm itself as a bottom down here in that 80-75 cent range, you know, there's a distinct possibility that this could get up to 1.4, maybe 1.6 over the next couple weeks here. So it's worth paying attention to. Like I said earlier, that 70, when it was at 75 cents, it was just no brainer for me. The look down here on bottom is just one of my favorite bottom type of looks. You've got this distinct micro channel. Over the last couple weeks, we were kind of leading that curl up into it, and then that 80-cent break, and you saw some follow through. I think it hit 89 cents after hours. So again, it's just got one of those classic bottom risk to reward curl type of looks. It was a no-brainer for me. You know, trade thesis still the same, using approximately that 200-day moving average, low 70 cents as my risk for the time being. But as far as potential on this type of trade, we're talking 1.4, maybe 1.6, especially if the volume keeps up. AMC, same thing with GameStop. AMC looks a bit more constructive than GameStop, so I'm going to focus on AMC here. But obviously, the last couple of days, just a brilliant move once it broke through that $14, $15 level. Tagged just a hair under all-time highs today. So again, it's not, you know, it's a pretty picture perfect chart, right? You've got this lower trend line that you've been riding along, that it's tagged once or twice over the last couple months of digestion. You have the high up here right around 20 all-time high, or I'm sorry, 52-week high. Back when we had that parabolic from $2 to $20, of course, the washout. Now we've had the multi-month consolidation. We've had one major inflection point broken, which we did earlier in the week, right there around, actually I drew that a bit high. It's actually a little lower. Right there, right around $14, $15 or so. So that was obviously a very big level that crossed. You've got some increasing volume on that break. Beautiful chart. It's a gorgeous chart. I don't know why anybody would be shorting this thing, especially given what happened back in January and February. With all these short squeeze Wall Street bet meme type of stocks. But it almost seems like we're getting back to a point where it's happening again all of a sudden. That being said, I don't expect this to just blast through highs and go straight to $30 or $40. That's certainly not what I'm expecting. I think the much more likely scenario is for there to be some digestion up here in this range, right above that major inflection level. So right there around 14.15 and right below the 52-week high level. So right there between 20 and 15, I could see us doing some maybe a couple weeks, maybe a week or two, something like that, a multi-week type of scenario where we chop a little bit, digest a little bit, and then, you know, it doesn't even need to look pretty necessarily. But if we kind of just construct ourselves back up into it, that's going to be the type of A+ scenario that I'm looking for here. A little bit of chop, a little bit of channeling. I want to see the volume kind of maintain itself. And of course, ultimately, I want to see the volume get back to a point where it supports another follow-through breakout. like we saw back here. It's very difficult to imagine we get 1 billion or 1.5 billion shares traded, but you get my point. I want to see a volume anomaly to support the potential breakout. But again, this right here, the multi-week little chop, that high and tight type of look, that's what I want to see. That's going to be the scenario A type of look. Of course, it's possible that this gaps up, to 24, 26 something dollars tomorrow, and that trade thesis is kind of out the window. Fingers are crossed, of course, but rarely does it go perfectly according to plan. So again, this is just ideally scenario A. We get some chop, we get a pullback, we retest down toward 15, maybe 14, get a washout. Down here is where I would look to, is where I would look to scale in for the potential for the second part of the trade. And then again, play into that breakout. But let's let it unfold. Let's let this trade materialize. There's no rush. I'll cover it when the